What is going to cause the next stock market crash? Hi, my name is Gary Mashures. I'm the managing partner and chief investment officer of Silver Ring Value Partners. I also teach the value investing seminar at the FW Olin Graduate School of Business. So recently, I had a couple of people I respect, financial professionals, kind of make the arguments, or ask me the questions like, hey, what is going to cause the next, stock market crash? Because, isn't it behind us? The Fed's bailed it out. If there was going to be a crash, it would have happened already. It kind of happened. Whatever happened. And so now, whatever the pace of the recovery, the path is upwards. We don't have too much to worry about as far as the stock market crash goes. So I actually strongly disagree with that mentality. Not because I think there is or isn't going to be a crash imminently, but because I think that that's just the wrong way to postulate the question. I mean, let's think about historically, right? Let's go, 1991, 92. What caused the stock market crash? Well, if you were asked before it happened, would you have been able to pinpoint, say, hey, this is what's going to cause the crash? No, you wouldn't have. Now, if you're, I don't know, in January of 2000, and you were asked like, hey, what's going to cause the stock market crash? The economy is great, things are fine, what's going to cause it? I mean, come on. Yeah, well, would you have guessed, recession plus September 11th plus, the deflation of the TMT bubble? Many would not have. I mean, I think that it would be, a little bit arrogant to think you could have figured it out before it happened. And then going 08, 09, if you're sitting there, January 2008 or something like that, or fall of 2007, like what's going to cause the crash? Things are fine, right? Well, maybe there's some excess in the housing market, okay, but a stock market crash, come on, right? So, my point here is that, and by the way, the recent event, who would you have guessed? I don't know, in the fall of 2019, that there's going to be a virus that originated halfway across the world that's going to cause massive economic and, health damage to us. You would not have. I'd be that betting you didn't know that in advance. So I think asking the question of what's going to ask next crash is the wrong way to think about it. I think the right way to think about it is to think about how optimistic or pessimistic are embedded expectations that are, imputed in security prices, implied by the relationship between price and the fundamentals, and also kind of where are we in the fundamentals, and kind of what's the reasonable range, and it should be a range of fundamental paths the world can take, or the economy can take, or a business can take, right? And I think if you think about it in that context, right now, the stock market prices are very, very optimistic, right? You've had a very quick snapback stock market recovery that has not yet been accompanied by nearly to the same degree of recovery in the underlying economy. Now, maybe it's coming, maybe it's not coming, who knows? So, I mean, I could rattle off a dozen scary things that could happen, but there's no way to know if any of them would happen, or if, if they were to happen, if they would cause a stock market crash. But there are plenty of bad things that can happen, or good things that can happen. So it's not about guessing what happens next. It's about kind of having using the evaluation lens as a lens kind of on the long-term expectations that are embedded in the prices of securities. And right now, what that's telling me is that, hey, there's a lot of optimism embedded in the prices, and that the sentiment that these folks who are asking me these questions of like, hey, what would possibly cause a stock market crash? That sentiment is actually reflected in prices by and large. That means that you should be very afraid, because if the majority view is that the worst is over and there's nothing to fear, that is exactly the time when you should be very careful, because not because you just want to be blindly contrarian, but because security prices are reflecting that. So I would caution you guys to be very careful. Only make investments that you think meet the highest standards of margin of safety, and just not worry about trying to predict if or when the next crash occurs, but just know that when you start with high implied expectations and prices, a crash is more likely than if you're starting with low or average expectations. If this video has been helpful to you, please hit like and subscribe to my YouTube channel. Thank you, guys.